Global equity markets have been surging this year, rising to record highs. But the upcoming US presidential election on the 5th of November is a major source of anxiety for many investors. The key question many are asking is, what will happen to my share portfolio if Trump wins, or conversely, if Harris takes the White House? Well, joining me now is Dr. David Allen, Portfolio Manager at Plato Investment Management. David, thanks for your time.
My pleasure. Good to be here.
First up, have you been surprised by how strong the market rally has been basically across the world this year?
We've been fully invested all the way through, so not particularly surprised. So many people, they anchor on valuations and they see, oh, the valuation's so stretched, this doesn't seem like a good time. But the correlation between valuation and returns over a 6, even a 12-month period is virtually zero. So, yeah, not quite surprised that that momentum is there, and especially with rate cuts begun, that's continued.
All right, let's move to the presidential election. How big an impact could this potentially have on markets? Doesn't matter who wins, but what sort of impact might it have?
Yeah, it's obviously huge. There's going to be winners, there's going to be losers. Fortune's going to be made, fortune's going to be lost, and I think the outcome that would cause the most damage would be a highly fractious, uncertain one.
Yep.
In terms of if Trump was to win versus Biden versus Harris was to win, if there's certainty in that, markets are very likely going to march higher in either direction. It's that uncertainty which is what we fear.
Now, I see you've got a PhD in quantitative finance. So just talk us through the data inputs you've used to come up with some modelling around the election.
Yeah, sure thing. I think there's a real danger in just looking at polls, listening to too many pundits, which are often their views tinted with red or blue, perhaps. The academic evidence and research demonstrably shows that if you want to pick a single choice for predicting election outcomes, it's the betting markets.
Betting markets, they're always right. They're usually pretty close to being right.
That's right, and it kind of makes sense when you actually step back because if you're betting on those markets, you're synthesising all of the available information, including the polls, and you're in real time and you're financially incentivised to get it right. So it's perhaps not surprising that they tend to be the most accurate. So when determining which stocks are likely to prosper, which stocks are likely to suffer, the best way to do it is to correlate the daily stock returns, which we do for the largest 17,000 companies globally, with those betting markets odds as they change day by day. And what you see is for a significant cohort of the world, it doesn't really matter, okay? But for certain cohorts, it is extremely decisive who holds the White House. And you see the stock prices moving minute by minute, day by day, on the basis of different events. And I guess an interesting one. You looked at the first Trump assassination attempt. Instantly after that, what you saw is the betting market odds took a huge gain, 70% probability of Trump getting elected.
Wow.
In the aftermath of that. But what coincided with that, there was a huge fall in the prices of the stock prices of big renewables names like Brookfield's Renewables, NextEra. They were down 15, 20% over the next 2 weeks.
Okay,
so being aware of that is absolutely key.
Yeah, okay, so say Donald Trump does win.
Yes.
What can we expect equity-wise? Are there going to be, he might put widespread tariffs again on goods, protectionist policies for the US and manufacturing, potentially lower taxes for billionaires, but what would that potentially mean on the equity markets?
Well, again, the best way to look at it is to look at the data. What's the data actually saying? What's the market telling us is the behaviour? Because a lot of what is perhaps intuitive isn't necessarily how things will play out. And a good example, I guess, of which is when Trump was in the first time, it was an unchallenged consensus narrative. This would be really bad for tech. And iPhone units were supposed to fall by 8 million. But if you'd heeded that advice, you actually would have missed on 150% upside in Apple over the next 12 months. You look at Biden as well. When Biden got in, everyone was petrified that oil and gas and energy would be decimated. But you know what the single best sector is performing over the 4 years?
What is it?
You might think it's tech, and IT is up 100%, which is extraordinary in itself.
Yeah.
But energy's up 150%.
Wow.
So the narratives aren't always the best way to look at it. Looking at it through the lens of data, what's correlating with betting market odds is, and so what are we seeing under that Trump victory? Well, one of the things that we're seeing, and this perhaps isn't surprising, is deep cyclicals. Deep cyclicals, particularly right up upstream, names like Halliburton and Baker Hughes, they're likely to do quite well. So no real surprises there. One surprise, though, that comes out of the data, though, is semiconductor names are poised. The market is telling us to actually do very well. So every time there's a leap in the Trump probability of getting elected, semis are actually doing quite well, which is a bit unusual in that people think, well, does that make sense? Because if he's going to come out with these tariffs, going to come out on export bans, then is that really going to play out in practice? And I guess what the market's telling us is, they believe perhaps Trump's bark may be worse than his bite. Personally, I can tell you that I'd be very surprised if Trump does anything that will tank the stock market, tank people's 401ks. That's exactly what will happen if you come out on huge export bans on the likes of Nvidia, which are that have been driving all those investments.
Well, it's been the market darling this year, hasn't it?
It has been absolute market darling. So I think the consensus narrative is, semis and tech's going to get hammered, but the data actually doesn't really support that.
Gold price has been close to record highs. We've seen a big surge for gold producers. Any potential for gold to shift on the election outcome?
Yeah, definitely. This is another interesting one, obviously pertinent in Australia where we've got lots of great gold miners. And what we're seeing there is a lot of people, pundits will say, Trump could easily usher in a period of great uncertainty on the geopolitical front. And, what does that mean? Is he going to apply a lot of pressure on the Fed? Is it going to be inflationary if there's tariffs? If that's the case, then gold, could be a great place to be. But again, when we actually look at how gold stock prices are correlating with betting markets odds, it doesn't play out that way. And it would more seem that the market is buying into the fact that Trump would lead to a buoyant economy, resurgent economic growth, and in that type of environment, gold actually tends to fall back a bit. And that's what we're seeing. So our models are saying that it wouldn't be a great environment for gold should Trump win.
David Allen, Portfolio Manager at Plato, thanks for coming on the show.
My pleasure. Great to be here.